love the channel and find it useful in becoming a happy retiree. Subscribe today. Facebook lost about $100 billion over the last 2 months. That's my transition into talking about markets. So Facebook just absolutely, a lot of wealth destruction happening inside of technology. And I want to talk about that today because it's not just Facebook. We've seen these massive losses for Facebook. We've seen a full real correction for Amazon. We have seen and the biggest of all is Tesla. So there's a tech rout going on. And there's a lot to do with politics. And we talked about this earlier at the very beginning of the year, the end of 2017, early 2018. We talked about how tech would be targeted at some point because they're just so dominant. And politically, it was just a matter of time before something happened to tech. And that regulation can put a giant wet blanket on stocks, as we talked about with IBM. And I'll talk about that history. We may be starting to see the same thing that happened to the IBM company in the very late 1960s and then impacted their stock for most of the 1970s. So just a tremendous amount happening within technology and government and politics. Let's weave all that together as it impacts Wall Street, not to mention rising interest rates and how that impacts you as an income investor. What we have been talking about is this tech rout to some extent. So we know that we had a great start to the year, that all the major averages actually now net negative for 2018. The Dow is down 2.5%. The S&P 500 is down 1%. NASDAQ is down 2% after being up pretty significantly. And remember Bitcoin? Do you remember Bitcoin? How big of a deal that was? Bitcoin is down 64% since mid-December. 64% since mid-December. I remember it being kind of the topic of conversation. I think it got voted as #1 dinner conversation over Thanksgiving dinner. Meaning, and Coinbase, the account where I believe that's where I have an account that holds a little bit of Bitcoin. Remember, I bought, I think it was $10 worth of Bitcoin. It went to $30. Well, it's probably back to $15 now. But I remember the site getting so, it was so popular. There was such a rush to go open a Bitcoin account that these accounts actually crashed and the servers crashed. And then we started talking about it here on the show, warning you that it's probably, whenever you see a parabolic shift upwards in an asset, it never lasts, and you end up with a scenario exactly what we've seen. You see this ski slope straight higher, and then you typically see a calamity. And I would say that sounds like a calamity to me, at least for all those folks who bought Bitcoin 64% ago. Now, we've talked, speaking of Bitcoin and technology, we've talked for months about tech getting into or finding its way into, let's call it, political crosshairs. And we talked about how Amazon would likely be a target pursued because of their monopolistic threat. And it's really, if you read the definition of monopoly, Amazon doesn't quite fit because it's not as though it's colluding and making prices higher for everyone for their own advantage. I mean, they've done in some regards, a wonderful thing for the economy, as they've lowered prices and they've sped up delivery and access and provided a retail channel for so many other, let's call it maybe tiny retailers. But what they've done is that in another way, and this is when I think the conversation starts to shift, they've done their own damage. And they've done so much damage by putting so many other companies in peril because of the business that they run. I mean, they've put retail businesses out of business everywhere. I mean, look what just happened to Toys R Us. Chapter 11 done. They're out of business completely. Now, so that, and we've seen this happen over and over and over again. And it's the Amazon effect. I mean, the minute Amazon says they're going into any business, hey, we're going into pharmacy business, boom. CVS, every pharmacy company down 5% that day. Hey, Amazon, if they said they're going into the tire business, tire companies would be down 10% in a day. So they spark fear, put fear into any industry that they are set out to conquer. And we've just heard this week, again, from President Trump. And Trump has been blasting Amazon for a little while, but just did it again this week. So there was a tweet, and part of that tweet, Trump is saying that, look, Amazon's been using our postal system as their delivery boy, causing tremendous loss to the U.S. and putting many thousands of retailers out of business. So again, Macy's, Toys R Us, Barnes & Noble, no brick and mortar or e-retail company has escaped the market disintegrating power that they wield. Last year, the company sold 6 times as much online as Walmart, Target, Best Buy, Nordstrom, Home Depot, Macy's, Kohl's, and Costco did combined. And now they're in the food business. So last year they went in and they bought Whole Foods. Now groceries officially in their crosshairs, or that business is. They're getting into financial services. They're getting into the pharmaceutical business. So they're disrupting transportation. I mean, it's everywhere. If you go back in the history of protecting public interest and trying to control, let's call it disproportionate economic power. The Sherman Act, let's go back to just a little quick history of 1890, and the Clayton Act in 1914, and the Federal Trade Commission Act of 1914, all restrict monopolies. And monopolies are unfair, and not just monopolies, but unfair M&A, mergers and acquisitions, and other collusive practices. Today, that's what the public is looking at here. The public is digesting and trying to figure out how much power is concentrated inside Amazon, and what the competition, or what sort of competition is getting stifled because of their power. All of this has started to come into the forefront, and we've always said that when that happens, that can have a dramatic impact on stocks and stock prices. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.